In this video, guys, I'm going to examine the Bitcoin derivative ban in the UK. Stick around. Hey guys, well, welcome to you. So as I'm filming this, it is the 6th of January, probably uploaded very soon. You might know that the UK has banned derivatives of Bitcoin. So why have they done this? What's the reason behind it? What does it mean for you if you're trading crypto? So go and check it out for yourself. By the way, guys, rules can change. This is my opinion on things, usual disclaimers, etc, etc, etc. But this is the way that I understand it. We have this scenario where Bitcoin, real Bitcoin, you can buy it. Fine, go out, buy real Bitcoin, however you want to do that on exchange, etc. If you want to trade a CFD in Bitcoin, you can't do that. If you want to trade a spread bet in Bitcoin, you can't do that, regardless of the leverage. They changed the leverage not long ago and kind of dialed that right down, but you still can't even buy that even if you have no leverage at all. So you can't even use 1-to-1 leverage or 2-to-1, nothing. Not allowed anymore from the 6th of January. FCA regulator gets this important point at the moment, are not allowed to offer this product to retail, to any traders, okay? And so we have this situation where if you already have a position, yes, you can close it or you can hold it, and I think there might be some sort of window you have to close it, but you can't open a new position. So what does this mean? Well, it means that your average broker out there is FCA regulated, like our channel sponsor, for example. You know, they can't offer Bitcoin anymore. Can't offer, but when I say Bitcoin, guys, I mean, you know, a variety of crypto that some of these companies offer. Can't offer it anymore. But an unregulated firm can. And as a UK resident, there is no law stopping you from opening an account with an unregulated firm. Now, of course, you are then opening yourself up to a whole world of danger, because if you start trading with an overseas firm that's unregulated, you could run off with your money, you're not protected. If you're FCA regulated, you've got the 85k protection if they go bust. You've got no protection. You're literally trading the Wild West. It becomes like the most ridiculous thing and high risk ever. If you suddenly made $1 million trading Bitcoin and they're unregulated, there's like a two-man firm sitting in a little office somewhere in the middle of nowhere, tough luck. You think you're gonna get your money back? Probably not. Now, because you think about it, any legitimate firm is going to be regulated. They want to be regulated, they're legitimate, want to kind of advertise as being regulated. So, you know, I never advise anybody to kind of open up a account with an unregulated firm. There are other options as well. Different regulatory bodies might have different rules. So you might be able to open one in Cyprus, for example. Now, again, there are pluses and downsides and upsides with this, and you've got to look at, if you're going to do this, guys, you've really got to do due diligence. You've got to be on the ball. You can't be half-hearted about this. You've got to be on the ball if you decide to do this type of thing, which is why it's just so crazy, because at the end of the day, the FCA say they're protecting investors, but they're doing nothing of the sort. You know, they're not thinking about it. We'll look at the rules, reasons in a minute why they did it. I just think sometimes, you know, they get these documents across their desk and they go, oh yeah, that makes sense, and they just make these rules without thinking about the consequences and think about, you know, if people want to trade Bitcoin, they're going to go elsewhere. They're going to go to an unregulated firm, which is way worse. The risks are now massive. Or they're going to trade physical, fine. You're not stopping people doing that. But anyway, you know, this is what the situation is. So these are the reasons why the FCA said that they were going to ban trading on derivatives of Bitcoin. And now, by the way, guys, listen, you know, if you're on this channel, you know, I'm not a huge crypto guy. I'm not. There's plenty of other guys who know far more about crypto and have been far more heavily invested and far more trading it than I. I like watching it. I think the supply-demand imbalance situation has been amazing to watch. Trade crypto. I've had a couple of little dabbles, but you know, I stay in my lane of stuff that I know and work with. But I don't think it's a bad thing. I think it's, you know, it's a good vehicle to invest or trade in if you like that, long and short, and invest in all these things. It's just another trading vehicle as far as I'm concerned. So the thing is, the FCA came up with these kind of reasons. One is there's no reliable basis for valuation. And we had this a few times, you know, there's no centralized exchange for Bitcoin, but that's supposed to be the feature of it, etc, etc. So their argument was, well, you can't value it. How can you offer derivative on something you can't value? Now, of course, the CFD providers, spread bet providers say, well, you know, we take it from these top exchanges, we aggregate it, just like they do with Forex. There's no centralized exchange for Forex. But they're taking an aggregate price from multiple different banks who are quoting a price. Yes, there's a centralized exchange for, you know, Apple or Amazon or Facebook and stuff, of course, but it doesn't really stop people from having an agreed valuation. So, you know, that's a bit of an odd one for me. Next one is got crime concerns. Now, this seems absolutely ludicrous to me, because yes, if you're buying physical Bitcoin, you've got a chance that your exchange, if it's held in exchange, that could be hacked, and there's a lot of stories about that. You know, there's the issue with the wallet and all this kind of stuff, and like I said, I'm not into it as much as many other guys on YouTube who are professionals, experts at crypto, but the way I understand it is this. But what crime can affect people who are trading a derivative of it? I don't know. I mean, unless there was some sort of crime that undermined the case that Bitcoin then went to zero or something crazy like that. If you're trading with a regulated firm, crime doesn't affect you. It only affects the valuation of the asset you're trading. And you're protected anywhere up to 85K if one of the directors starts to nick the money. You know, that's an interesting one to me, and I don't get where they're coming from with that. And number three, very volatile. You know, this is almost makes me just laugh out loud. There are so many instruments out there that are volatile and are more volatile than crypto. Have a look at some of the recent stocks that have just ripped from $5 to $80 in a couple of days. On a percentage basis, that's a lot more than Bitcoin's done in a couple of days. So, you know, it's like saying, well, do we ban anything that's suddenly volatile? Oil went negative not too long ago. Do we ban oil? The point of volatility is it can be tamed by using small position sizes. They've already kind of dialed that lever by not allowing people to trade leverage. So volatility is what people want. They want movement. They want to trade it. That's why everybody flocks to stuff that's moving. That's why all the brokers say, hey, this is moving today. You want to look at it? They go, yeah, oh, this is moving. I want to get involved in volatility. You know, too volatile is such an arbitrary thing to say. There's so much stuff out there that's more volatile than Bitcoin, in my opinion. Yes, it's a volatile instrument when you compare it to something like the FTSE, for example, but you dial your position up and down to suit the volatility. If the volatility is this much, then your position size is accommodated. If it's this much, your position size is bigger. Hey, it's a simple way to trade. The next thing here, guys, is that retail don't understand it. Now, I don't know why retail need to understand it. All they are doing is speculating on the direction of the market. Do they really need to understand the intricacies of blockchain? They're better off understanding risk-reward ratio, understanding how to mitigate risk, understanding gap risk, understanding volatility risk. That's more important than understanding the underlying product that they're trading. Do you understand how the soybean market operates when you trade soybeans, or crude oil? Do you understand the intricacies of a company when you trade it? No. You just trade the direction or your expected direction of the instrument, and that's it. So I don't get why this is such a big issue for the FCA of understanding it. And you know, it's more understanding the risks of trading a product rather than, especially when they're focusing just on derivatives rather than the actual, you know, cryptocurrency itself. Anyway, the final thing is no need for it. This is the most laughable one ever, I think. No need for it. So what? So what? If retail traders don't need it, who cares? Do retail traders need crude oil? Do they need anything? No, they don't. This is if they want to diversify with crypto exposure, then why can't people do that? I mean, this is the most ludicrous thing I think I've ever seen, that retail traders don't have a need for it. They're there to trade on a volatile product. They're there to make money from a directional move in a market. That's what traders are trading. That's why traders are trading CFDs or spread bet. That's why you trade it. That's why I trade it. We don't need it. It's not going in a portfolio. And if it was going in a portfolio, we'd probably buy the actual cryptocurrency itself and go, hey, I bought some Bitcoin to go with my stocks, to go with this, to go with that, and it's a portfolio. So why they're attacking spread bet and CFD? Anyway, guys, I don't know, kind of something's going on behind the scenes potentially why they've done this. It seems like they left loads of loopholes open. It seems like it's just attacking the average trader like you and I, who are looking to speculate on direction of an asset, another asset. But anyway, there's the rules. UK banned derivatives trading on cryptocurrencies from the 6th of January. What do you think about that? Let me know, guys. Bye-bye.